Top 5 asset classes every smart investor should own by 2025. As we approach 2025, the investment landscape continues to evolve rapidly, shaped by advancements in technology, shifting geopolitical dynamics, and the growing impact of global events. For investors, these changes present new opportunities, but they also come with heightened risks. While every investment strategy requires careful thought and planning, one of the most important principles remains unchanged. Diversification is key. By owning a diversified portfolio of high-potential and stable asset classes, investors can weather market volatility and ensure long-term financial success. Here are the top 5 asset classes that every savvy investor should own by 2025. 1. Equities. Stocks. Equities have historically been one of the best ways to build wealth, and they remain a crucial component of any investment strategy in 2025. While stock markets are known for their volatility, the long-term growth potential of equities is hard to beat. Investing in stocks means owning a piece of companies that generate profits, grow their businesses, and increase their value over time. Whether you invest in individual stocks, ETFs, or mutual funds, equities provide investors with an opportunity to participate in the growth of some of the world's most successful businesses. By 2025, technology and innovation will continue to play a leading role in shaping the economy. The rise of artificial intelligence, green energy, biotechnology, and fintech will offer investors ample opportunities for high returns. These sectors are expected to expand rapidly in the coming years, and owning stocks in companies involved in these industries can yield impressive growth. Key benefits. Potential for high returns. Over time, equities have outperformed almost every other asset class. Liquidity and flexibility. The stock market provides an easy way to buy and sell investments. Dividend income. Many established companies pay dividends, providing investors with a steady income stream. Smart strategy. To optimize returns while managing risk, diversify your stock investments across sectors such as technology, healthcare, and renewable energy. Consider using index funds or ETFs that provide exposure to a broad range of companies, and balance this with some individual growth stocks in high-potential sectors. 2. Real estate. Real estate remains one of the most reliable asset classes, particularly for those seeking to balance risk with stability. While the COVID-19 pandemic shifted the dynamics of the real estate market, the sector has shown strong signs of recovery. Real estate investments offer 2 key benefits: income through rental yields and long-term appreciation. Moreover, real estate acts as a powerful hedge against inflation, as property values and rental rates generally increase over time with rising consumer prices. By 2025, property markets are expected to continue evolving, with more investors seeking out properties in growing suburbs, tech hubs, and emerging cities. Fractional ownership through real estate investment trusts, REITs, has also opened up opportunities for smaller investors to get involved in real estate without having to purchase entire properties. Key benefits. Stable income. Rental properties provide consistent cash flow, especially in high-demand areas. Appreciation potential. Real estate generally appreciates over time, making it a solid long-term investment. Inflation protection. Property values and rents tend to rise with inflation, providing a safeguard against currency devaluation. Smart strategy. Invest in a mix of residential rental properties and commercial real estate. If you're not interested in managing property directly, REITs can provide exposure to the real estate market without the hassle of direct ownership. Additionally, vacation rental properties, EG through ERM, can provide higher returns in the right locations. 3. Cryptocurrencies and digital assets. Cryptocurrencies were once seen as speculative and risky, but by 2025, they have become an essential part of the modern financial ecosystem. Digital currencies, such as Bitcoin and Ethereum, are now widely accepted and increasingly integrated into traditional financial systems. Alongside cryptocurrencies, decentralized finance, DeFi, and tokenized assets are gaining significant traction, offering investors access to new opportunities in the digital space. What makes cryptocurrencies attractive is their potential for high returns, as well as their ability to function outside traditional financial institutions. Blockchain technology has revolutionized many industries, and digital assets are expected to play a key role in shaping the future of finance. However, cryptocurrencies remain volatile, making them a higher-risk asset class. Investors need to approach crypto investments with caution. Key benefits. High potential for returns. Cryptocurrencies have seen exponential growth in value, particularly Bitcoin and Ethereum. Global access. Cryptocurrencies are borderless and can be accessed by anyone with an internet connection. Decentralized finance. Cryptos provide an alternative to traditional banking, allowing peer-to-peer transactions and decentralized lending. Smart strategy. Allocate only a small percentage, around 5 to 10%, of your portfolio to cryptocurrencies to manage risk. Focus on well-established coins like Bitcoin and Ethereum, and stay updated on the evolving regulatory landscape. Explore DeFi and NFTs if you're looking for higher potential returns but understand the risks involved. 4. Bonds and fixed income securities. While bonds may not offer the excitement of equities or the growth potential of cryptocurrencies, they are a crucial component of a diversified portfolio. Fixed income securities, such as government bonds, corporate bonds, and municipal bonds, provide steady, predictable income, making them ideal for risk-averse investors or those nearing retirement. With fluctuating interest rates and inflation being key considerations in the coming years, bonds will provide stability in an otherwise volatile market. In particular, inflation-protected bonds, like TIPS, Treasury inflation-protected securities, will help safeguard against the erosion of purchasing power. Key benefits. Steady income. Bonds pay interest over time, offering predictable cash flow. Lower risk. Bonds are less volatile than stocks, making them a safer option for conservative investors. Capital preservation. Bonds are designed to return principal at maturity, which helps preserve capital. Smart strategy. Diversify your bond holdings with a mix of short, medium, and long-term bonds. High-quality bonds from stable governments or top-rated companies will provide more security. Consider allocating a portion of your portfolio to inflation-protected bonds to shield your investments from rising prices. 5. Commodities and precious metals. Commodities and precious metals have long been recognized as hedges against inflation and economic uncertainty. In 2025, with global markets facing potential disruptions, the value of tangible assets like gold, silver, oil, and agricultural products will continue to rise. Precious metals, especially gold, have proven to maintain value over centuries, making them a solid store of wealth. Moreover, as the world transitions toward renewable energy and electric vehicles, metals like lithium, copper, and cobalt are becoming increasingly important due to their use in battery production and green technologies. Investors in these resources are poised to benefit from the global shift toward sustainability. Key benefits. Inflation hedge. Commodities and precious metals tend to retain or increase their value during inflationary periods. Tangible assets. Unlike digital investments, commodities like gold are physical assets with intrinsic value. Diversification, including commodities in your portfolio, can reduce overall risk by providing a counterbalance to traditional stocks and bonds. Smart strategy. Invest in gold and silver through ETFs or physical ownership. For broader exposure, consider commodity ETFs that track multiple resources or focus on metals critical to emerging technologies. Keep an eye on geopolitical events that could affect commodity prices. Final thoughts. By 2025, the most successful investors will be those who take a holistic approach to portfolio construction, blending traditional assets with newer, high-growth opportunities. The 5 asset classes outlined above, equities, real estate, cryptocurrencies, bonds, and commodities, each offer unique advantages and will play a significant role in shaping your financial future. Diversification remains essential. Owning a variety of assets allows you to minimize risk while maximizing growth potential. Whether you're an experienced investor or just starting out, now is the time to build a well-rounded portfolio that positions you for success in the years to come. Let me know in the comments section below. What do you think of our video? If you enjoyed this video, make sure to hit that like button. Also, subscribe to our channel before you go. Thank you for watching.